The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, 11 o'clock till 12, Monday through Friday. My pleasure to be here. What's the date today? April the 18th. So, very interesting market. First of all, thanks, Steve. Always educational. Just comes up with fabulous techniques that he's working on as he shares. Just a great show. 2 hours. Very, very nice. Hey, I'm going to be doing 2 hours today. Just to have information that Larry won't be here for the next hour, so I'll be taking over for 2 hours. So we've got plenty of time. Call in. Love to hear from you at 877-927-6648. International number. I'll yell it out one more time. 1-727-445-1044. Love to hear from people out there. We know you're there. We get emails all the time from people right across. Oh, talking about emails, had a fabulous email from one of our fabulous tigers out there in London, and he, I don't have it in front of me here. I wanted to show it, but let me just see where it was. I believe it was in India. There was some guy got this gold shirt made. Now, how much do you think a gold shirt would cost? I was looking at shirts the other day. I just happened to be walking by. Back in San Francisco. I'm walking along, and I look at the store, and I look at the price of a shirt. A little bit more than I like to pay. It was only $385. And I said to myself, gee, $385, that's what I like to pay for a suit. Of course, nobody wears suits anymore. And so $385, well, I would say that's still a little low for a gold shirt. This guy paid $250,000. I agree. Bob in the Den says bargain sale now on those shirts. Yeah, Filene's. I miss Filene's. We used to have a fabulous store down here called Filene's Basement. Well, Filene's and then Filene's Basement. And then the Filene's Basement that came about afterwards had nothing to do with the original Filene's Basement. That wasn't original. You used to be able to go down there and find the most exquisite clothes, women's wedding dresses and all sorts of things. And those were really discount prices because they would mark them down by the month or the days or something like that. But you had to be a hockey player to get in there or a very aggressive tennis player to be able to get in there and survive. So $250,000, and of course today he could sell it for $210,000. Because gold since then has come down quite a bit. Now, talking about gold, it's going to be very interesting. I'm looking at something that's happening here. We discussed a little bit of it yesterday. We'll get into that. Now, I'm watching this market real closely. Why? Because I have a technique that I call the ChapmanWave Trin Gauge. It's a measure of certain price points within the Trin that I use to decipher whether or not there's going to be selling the next day or a very strong buy within 2 days, and it could be an intraday very sharp move. It usually starts in the E-mini futures and then goes to the down the S&P, and invariably you would get between a 7 and a 9 point or more rally in the S&P from however low it starts. You would still go positive. So the comeback this morning from being down quite sharply to being now only down 20, the Dow is actually better than that just a short while ago. The S&P is down only 3.5. That's a good sign. I don't know. This has got an incredibly accurate record. In fact, it hasn't missed more than once or twice in the past year. So if this doesn't get it today, that'll be like the third time that it hasn't. By tomorrow, if it hasn't got that sharp rally. Now, let's go through the numbers. Let me just go to this particular choice. This is the one? Wrong one. I wanted to show that chart, but this is not what I really wanted. Let me close out of this closed workspace, save, and I'm going to go to this one here. Why? Because I'm going to use I'm going to use this just to be able to give you a sense of certain aspects of the market that I think are very important, but most significant will be right now, we're going to do all the numbers. So the Dow is down 21 at 14,597. The S&P is down 3 at 1548. The comp index is down 14 at 3189. Now, this is very interesting. You've got gold down 8 at 1374. Silver's down a little bit at 3. Silver's down a little bit, and it says 2328. High-grade copper is down at 3.1. I just don't like copper at this level. Copper has to rally for us to have a pretty decent, at least a bounce. You've got bonds down 230 seconds at 147 and 29.30 seconds. And you've got the dollar down 22 at 82.46 on the index. Got that out the way. Now, what I wanted, crude oil. Crude oil is at 87.16. I'm probably going to leave it for the next show. That is for Larry's show, because he's got the commodities hour. So I'm going to talk about, I've written it down here. I'll just touch on it at this particular point. I was asked about, yesterday I was asked about gold, and then I was also asked about, in an email, sugar, I believe I wrote it down. I think it was sugar, and there was something else, and I'll check it all out in a moment. Most importantly, what I wanted to say is, at this particular stage, maybe I'll just use the black chart for 1 second. In the SBN, I think I'm using. Yeah, let me go to the. I'll just do it for a second in case I forget in the next hour, and then we're going to go to the markets themselves. So the SBN, I don't trade this, so it's just for me. It's a theoretical exercise. SBN 13. Yeah, that's the sugar. I'm not sure why anyone was asking about the sugar, but what I've got here is a left side, right side price time match in sugar. Let me just update it here. And that says that the low of the weekly chart of December the 31st, 2010 at 1770, that is key support. It can actually go to the bar below 1760, or isn't that? Yeah, 1770 to 1760. But there's a left side, right side price time match with a diagonal trend line, which I call the ChapmanWave inside wedge. I'll do this a little bit in greater detail in Larry's show when I do it in the next hour. But basically what it's saying is that the bar that takes out the left side low bar, this is not the most significant low bar, but it's really important. The bar that takes it out, and remember I always talk about the left side to the right side, most of the time you would have an arch formation or a cup formation, or it could in fact turn out to be a V or an inverted V, and there's a match between the movement to the upside and the movement to the downside, except when? In crash mode. Well, at this particular point, it's just been a very steady move to the upside, and now we've got a very steady lower highs, lower lows to the downside. The MACD is attempting to find some support. The volume is huge last week and this week, and what I'm looking at is the stochastics at 7%, and that says there could be a bounce in the weekly chart, and at this particular point, it might not be much more than a bounce. So I'm going to be watching that very closely, and I have to thank Steve for putting in a chart with all the numbers here into the den. It was very that's a big help. Thank you very much. Now, we're in leg E to the downside in the daily. So I'm just going to leave it at that. That sugar looks to me like it still has a way to go to the downside. I wasn't sure whether the person was short or long or whatever. Now, the other thing is I just need to take one moment to talk about GCM. I'm going to the June contract of gold, and that has a volume spike to the downside. Actually, let me use the GLD. I think you'll be able to see it a little clearer. GLD. And gold right now, therefore, I need to be updated because I was a little behind on the chart I was looking at. I don't trade gold, so I don't get it up to the seconds, like 20 minutes delayed or something. Gold is up 14. Great. Look at this. There is a volume, what I call in the ChapmanWave methodology, a climactic volume spike. That was in the GLD at 130.51 on the 15th. There is enough evidence to say that we're at a very critical moment in terms of a rebound in gold. In my opening call this morning, we are actually trying to trade this rebound with a pretty tight stop. I'd say it's a stop that is maybe what did I say it was? Let's just say it was at 32 or something like that. We've got a 1-point stop for a potential 3-point rally. That's the way I'm looking at it now. I think the risk reward is there. Here's number one. Number two is that if gold, and I'll go into this a little bit in greater detail soon in Larry's show, if gold is able to, GLD is able to pop above 136.75, that shouldn't be far away if, in fact, we've had a climactic volume spike. That's not to say that the monthly doesn't look horrible, and the weekly is trying to bounce, try to touch the 140 level in the 200-period exponential moving average, but I'm liking what I see, and I'm wrong. I'm absolutely wrong. If there is a break, first of all, I'm kind of wrong at 132.30, and I'm absolutely wrong at 130.50 because it's going to be a failure mode, and that says that particular technique is not going to work right now. But it's called the volume climax. It's something I've been working on for years. When it works, it gives a very long, and I'm talking 28 to 35, sometimes even longer number. In this case, we're talking days, so it could be days to the upside. But it's not that it's not a point move. In other words, it isn't necessarily a V-shaped move that says, wow, that's the end, and now we've got a massive bull market. It just says it's a bouncer going to use up time, not all that much price historically when you look at the chart, but on a percentage basis, it could be nice. We'll see. The day's young. We'll see what happens. So I'm going to go to our first caller. We've got Mike in Ormond Beach, Florida. It always sounds so nice. Ormond Beach. Hi, Mike. How are you?
Pretty good, Basil. Basil, I wanted to just ask you if you could do one thing. I know you're real busy and everything, but if you could always try to remember to say the date ahead of your show. A lot of times.
Yeah, actually, I thought I did this morning. I think I forgot it the other day. Normally I do that,
yeah.
But absolutely, thank you for reminding me. I know that when I listen to archives, I like to know the date because it puts the perspective exactly on cue instead
right.
of saying, sometimes if you don't say the date, you can look like it was a fantastic call, but in fact, it was the wrong day and the wrong time, and you actually missed the call, but it sounds like it was right.
Yeah, now, I got a problem. I guess a lot of people would like to have. My full-time job keeps me so busy. I can't spend as much time, studying the market stuff as much as I want to, and that's why I'm calling you. If you could kind of summarize where you think we are in the markets in the longer term. I know a while back you thought that we were starting to get kind of close to a socioeconomic top.
Yep.
And I think the last time I spoke to you, you thought that we probably couldn't get some kind of a major top in the Dow until like at least June or something.
Okay, great. We've got a break coming up. We got Mike in Ormond Beach. Great question on the Dow. We'll be right back. Dow is down 20, and I'll be right back.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. We are back and we're on with Mike in Ormond Beach, Florida. And Mike had asked me about my longer-term view of the Dow, putting together the socioeconomic, political, and market trend analysis that I love to do. And this is what I'm thinking. Well, first of all, I don't know if I mentioned this the other day. I think I might have. In my report back in the 1980s that I did, which is part of this chapter called The Psychology of Investing in a book published by Wiley, I have chapter 13, the mega market still to come. This was written way back in the late 1980s, and then I updated it in the 90s. My perspective said that you can sum it up very simply. At some point, and I can't remember if that was in the chapter or if it was in the articles that I had written going towards the formation of this chapter. And this was when Cadillac stopped making the convertible. General Motors was putting plastic parts. They used the chassis of the Chevrolet, I think it was, for Cadillac. I mean, it was pathetic. Then they ran out of Cadillac, so they imported that car from Europe, which had, was it a Maserati engine? And they called it a Cadillac, but it really wasn't a Cadillac. And that wasn't a success either. But I said at that time that one day, Buy America would come back into vogue and that the pink Cadillac will be back. Well, I happen to have a picture that I saw this car back in Brooklyn. I think I did mention it a couple of weekends ago, and I took a picture of this brand new Cadillac, and it was pink. and I said to myself, wow, we are getting close. When I was in San Francisco, went to many museums, but one of the museums I went to, my wife had recommended, it was next to the convention center that she was at this conference, and it was the Museum of Modern Art in San Francisco, which I thought was, first of all, they didn't have any signs. I was lucky to even find, I don't know how they can not put signs up. Anyway, I find this building, and I loved, from the moment I walked in, I enjoyed it, but at the same time, I thought it should be a bigger building. But once inside, it was bigger than I expected from the entrance. But as I'm standing there, there's this guide, and what does she say? She's telling these people, oh, and I see her waving her hands in this the arms are stretched out in these big gestures, and I thought she was talking about a painting. No, what is she talking about? She's saying, and the plans are to double the size, because this entrance is, people have commented too many times that it's a very small entrance and it looks too narrow. So we're going to redo the whole entrance. And I thought the museum was really a beautifully designed, lovely museum, lovely light, everything about it. They're going to double the size. I've been talking about this for I don't know how long. At some point, that's coming to roost. We are going to pay a penalty for all these institutions because they always do it at major market tops. So my socioeconomic outlook is one that says that we are going to go into some kind of crisis mode at some point. I don't want to even think that it could be like a depression of the 1930s. There are many other safeguards that are there. But we're going to go into a very tight situation at some point, and it's going to impact everything all the way around, whether it's real estate, whether it's the stocks, it might even be commodities. I don't know about gold. I'm going to be doing my analysis on the longer term of gold, but at this particular point, I still think gold has a decent chance for a pretty nice rally, and then I think it goes to lower lows. So that's my perspective on the socioeconomic. Yes, Cub, it wasn't Opel, but Opel wasn't the car that they used the Opel for something else. It was the Cadillac of a specific in the 1970s, maybe early 80s, that they imported this car, and they imported the engine anyway. So now let's go to the reality. The reality is that we are making a peak C in the Dow if there's no new high this week. That's 14,887.52 would extend this leg, and I'm actually calling it C, but theoretically, officially, it's really B, but I have to go with the fact that the S&P, the 500 stocks, really is making a peak D if there's no high above 1564.91. So that's the 1597. Sorry, my mistake. Things move so quickly around here. 1597.35. Thank goodness I managed to. 1597. I don't know if I said 31 or 51. I'll call it 51. And that was, if it doesn't go above that, we've got ourselves a peak D in the weekly. That says, wow, you better be careful. But my monthly chart, no matter how I count it, unless it's a very rare thing that the bar that made the low becomes the high in so many charts. In fact, this is a candle that I made. Oh, have you got time to hold on?
Yeah.
Okay, good. Because I want to go through this to say that we're in leg C in the monthly and explain what I'm looking at, because it says there should still be a leg D. So, folks, Basil Chapman, Tiger Technicians Hour, between 2 hours today. Dow's down 45, S&P's down 5. Oh, fascinating period.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. We're back, and we're on right now with Mike from Ormond Beach, Florida, and we are talking mega cycles. We're talking about the big picture. So now let's get practical. If I'm showing a chart right now, if you're looking at my monthly chart of the S&P, which shows the resistance, I've got it in pink. It doesn't show up quite in pink in the charts that you're looking at. It's kind of a gray. Yeah, you can see a little bit of pink. But this section right here at the top shows the barrier of the 1500. So 1557 was the high back in 2000, March of 2000. October of 2008 was 1576. And now where have we gone? 20 points above that, to 1597.35, but we're only in leg C. That makes the coming pullback, whether it's going to be 3%, 5%, 12%, whatever it is, very important. If it occurs without a new high in the weekly, this week, that'll make the weekly a peak D in the S&P. The Dow still has, it's either a C or a B, but that I'm using the bigger picture of the 500 stocks. And that says we're in the area that you can expect a lot of resistance. To break out would mean that you need to really get into the 1620s. The moment you're in the 1620s, then the up channel resistance becomes somewhere around 1680 to 1690 on the S&P. Now, let's just put that into context. And the context that I'm putting in says I have no choice but to be bullish, because in the ChapmanWave methodology, if you get to this level, invariably you will still get to a leg D. So so I've answered your question, leg D. And as we're getting to leg D, more and more of these technical aspects are coming into focus. And it says that we are in a period. There's a song that Irving Berlin wrote in 1934, I think it was, called Anything Goes. And we are absolutely in the period of anything goes. In fact, it's so much anything goes that people are even afraid to tell anyone that they've crossed a border because nobody even knows what the border is. That's number one. Number two is, if you look at the Dow from the period of February of 1966, where the Dow hit 955.17 and then snuck to a high, February of 1001 in February of 1966. It pulled back, and what did it do? It pulled back to 735. Then it ran up to 994.85, and that was 65 or 85. 65, that was in December of 1968. Pulled back even deeper. Doesn't that sound familiar? And it goes to 627 in May of 1970, and then it runs up to yet another peak D to a slightly higher high of 1,067, and then it goes to a lower low of 570 in December of 1974, and then it runs right back for a fourth time, and it goes to, I've called that a phantom C, so it went to a peak D at 1026 in September of 1976, and then it pulls back, and it keeps doing that until in the Nixon years, October of 1982, it finally breaks that 1,000 barrier. So this went from 1966 until 1982 before it broke out. Mm-hmm. So I'm trying to give a perspective here that says, we've seen trading ranges before. So I want you to put it into perspective, historical perspective. So we've got a high of 11,471 in the Dow in January of 2000, a high of 40,198 of October 2007, and now we've made a high. So far, the high is 40,887. Each one is not that much higher, but they are higher. And we have made that lower low down into 64.69. So I remain a bull, but now I'm starting to look at certain socioeconomic and political aspects that are saying, wow, we are going to go into a period with the next rally of the leg D that is going to be the one that has to be monitored really closely. But we're not there yet. So I hope I've answered your question in a rather circuitous way, but I wanted to cover stuff I've never covered before.
Right. So in the monthly chart, assuming that we've made our high and form peak C this month, and then if May is lower,
right,
and then we should go to a monthly leg D and peak D sometime after May, as long as
that, if peak C is made, because in May we do not make a higher high than the high bar of, let me just go back to the Dow,
14.8.
If we don't go back to a higher high than what's made this month, and already we're looking at a potential doji candle, which could be a halfway marker or a reversal, then what I'm looking at is that the next leg up can only start, the earliest it can start is in June.
Correct.
Because you need the whole of May to make a lower high bar. Now, it could turn out that we've seen this before, that from peak C to the start of leg D, you actually only have 20 or 30 points from the high, because it doesn't pull back that much in May. But I'll just let that play out. That's a very important scenario. The other thing is, if I'm looking at certain stocks, like a General Electric, like there are a number of stocks that I'm looking at, like a Ford, like a General Motors, they have not really had their major bull market. And my suspicion is that after the next big pullback, they should have a pretty darn good rally. And that could be, I don't know if it's the culminating leg of the market, but that could be where we really get evidence that says, now we've got all the different sectors and the laggards starting to move in have a rotation so that they can have their major move to the upside. That's my thinking. We'll see how it plays out.
Okay.
So I hope that helps you.
Has it ever occurred where we've gone to a peak C and not gotten a leg or a peak D and just gone down from the C in the monthlies?
Yes. Once it happened, I need to just go back here. I've got the charts right here. In 1929, let me just double check that. I don't want to talk out of turn. In 1937, the high was a peak G. So that would have had the same kind of pattern where the D really didn't start over with an ABC, but in fact went to an E, an F, and a G. That's the only time that I've got it in all my monthly charts going back to 1920. So absolutely. But if you look at the MACD was the hint that that rebound that should have squeaked to a C in 1937 and went to 189.94, just missing the 195 area. It should have bounced a little further. The MACD and stochastic were failing terribly, and that gave you the impetus to pull back. So I'll be watching for that potential. But if you look at it as current, let me go to the chart right here. Currently, the MACD is still accelerating to the upside, and the stochastic is at 93%. So my suspicion is that there is a difference, that we should get at least a D in this particular move.
Okay. Well, thank you very much, Basil. Appreciate it.
Very, very good question. Thank you so much for giving me a chance to elucidate on that. And always good to hear from you, Mike. Thank you.
Yeah, like I said, I'm so busy I can't focus on my TFNN shows all the time, but oh well.
Well, we always appreciate everything that you can give in terms of listening to TFN. We always appreciate our listeners, and you are a fabulous listener. Thank you so much.
Yep, you're welcome. Bye.
Thank you. Bye. So now, folks, let's just go to a couple of other things, since we're looking at these charts in a slightly different way. I need to do two things. I just wanted to show you a couple of aspects that I needed to. There you are. Okay. There must have been a report out, because this was one of the stocks that I was looking at. I was talking over the last few days that there are certain sectors that I think are getting extremely overbought. And within that context, I said that kind of healthcare, but certainly the biotechs. Look at the healthcare. Look at this UNH. It has a left side. It's unbelievable. I looked at this. I looked at it, but it was such a nice candle yesterday. I realized that there was a report coming out. Look at this ChapmanWave technique of the left side to the right side. I did this ages ago. 64.61 was the peak F top back in December of 2005. It plummets to 14.51, but what does it do? It has a beautiful cup formation, and it goes to where? To a high day before yesterday, I think it was, of 63.95. It misses by 70 cents, less than $1. United Health Group, UNH, down $2 at 59.94. And I thought, I'm looking for a white lightning potential stock here, either long or short. And this was on my list, but I decided in the end, I forgot actually that earnings were coming out. I'd heard it, but I just forgot, because the stochastic was like 82% or something, and the MACD was still very good. So what does it do? It plummets from the high of yesterday of 2 days ago, 63.95, and it goes down to 58.03. What is 58.03? It is the 9-period exponential moving average that it bounced off. So I just wanted to show you how techniques can really work. And here's the other technique. The reason why I decided not to buy the put, because it would have been great to close yesterday at 61.98. And I thought, wow, a 60 put. And I thought, no. This is a rectangle formation, because if it has any strength at all, it could go above 63.28 to make that rectangle. Well, it collapsed and plummeted through. So peak E in the daily, peak D in the weekly, and a potential leg D going to a peak D with a stochastic and MACD, not confirming the rally. So there are stocks that you're going to have to watch. And here's something else that's really important. The action that, in my opening call, I got out with a little bit of 2%, 3% loss in Ford and General Electric yesterday. I wanted those stocks because I felt very strongly that if they were going to work, they had to work now. So I tightened up the stops. I was very upset that we got stopped out yesterday, but my rules are really strict. Well, you know what? It's just as well, because G is now trading at $26.68 and Ford is at $12.75. That's the reason why at this stage, when I'm starting to get chopped around with a 2% and a 1% loss here and there, I want to step aside. I'm saying to myself, wow, this is the action that says to me we're getting to a top, because with my technique, if it's not working, it says, whoa, you're looking at the market every minute of the day. Some people don't even look at it more than once a week. So you have a very in-depth, inside look at the market. If your work is not giving you the kind of potential that it should, step aside, because the market, the tide is possibly changing. That's number one. Number two is, I wanted to go with shorts and longs. I love that when you can play the long side, you can play the short side. So we're fortunate we have a stock today that's up 2.67% just from yesterday. In fact, we took profits on half the position. The other half is up 30%. And another stock that's up even more, but we've only got a core position left. I'm prepared to stay with those positions because I like them. Also, we've got a short position that's working right now, down 1.44% today. I want this. I want to be able to split. I want to bifurcated personality here. And the car that I was thinking of in the Cadillac, I believe, if I remember is correct, it's a Catera. Funny little name, a Catera. So it was a two-door Cadillac. Once in a while I'll see one going by and I'll chuckle, but I don't think it was a very successful car for Cadillac. So going back to the story, this is a market where capital preservation is absolutely imperative. The fact that we've got a brand new buy to this morning and it's up 10 or 15 cents, that's just nothing. This is almost, I wouldn't say an experiment because I'm using the ChapmanWave methodology. If it doesn't work, I am out. I don't mind even sitting on a lot of cash right now. Why? Because even though I still see a potential for one sudden spike to the upside, the way the charts are forming, the way I'm getting IBB, let me see, I hope this is all updated. Oh boy, IBB. Let's see if I've got it. IBB. Oh, why isn't that notated? Oh. All right, well, it doesn't matter. I'm going to go to this. I'll do it right now in front of us all. So this is A, B, C, D, E. So it's an E. It might have recycled in the weekly, but I'm calling it E. The on-bounce volume just turned down. Relative strength is just turning down. MACD is still good. Stochastic is just turning down, but still at 93%, and that's good. But I've got a huge, I wouldn't call it I wouldn't call this extension a vertical extension of the iShares NASDAQ Biotech ETF, IBB, trading at 165.70, down 142. But everything about this chart says it's only a matter of time before a pretty decent consolidation takes place. Well, you've got the same thing when you're looking at a Johnson & Johnson. Oops, Johnson & Johnson. Let me type it in here. Johnson & Johnson. Acting fantastically. There's a chance. It's just a chance that I've got not a brand new B, but a leg F, maybe a peak F in the daily, a leg F in the weekly, and a strong leg D in the monthly. So it's not to say that this should crash, but it says a consolidation in the healthcare and drug manufacturer Johnson & Johnson, trading at 83.38, down 52 cents, is not unlikely. And we will look at the IYT when we get back. Oh, we've got Michael waiting in New York. I'll be back with Michael as well.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success, and it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, correction. Boy, the den is a wonderful medium. Look at that. Les says, I think Pinan Farina did the body for the Alante. Yes, the Alante, that's what it was. The Catera, it wasn't the Catera. That was a terrible car. Alante, and it was a 2-door. In fact, it was quite a nice style. It wasn't successful. I mean, there were not that many made. Okay, Michael in Long Island. How are you?
Good. Intuitive Surgical reports earnings after the close today.
Oh, well, let me tell you something. It had a whopping volume spike to the downside on the 15th. It's rallied some. It's got stopped dead right at the 516 area of the 200-period exponential moving average. ISRG symbol was trading at 498, down 8.87. We've discussed this. Everything about the chart says that it's been in a trading range. It broke below the most important cup formation low of 467.26 the week of the 27th of July. It's gone underneath it. It's bounced back inside that range. Everything about it says that the Roman candle of last month should be taken out and that this stock should slide below 455.18 over the coming, I'd say, 2 months. Do you have a position in this?
Very small, short position.
Yeah, okay. So, but you've had a short position for a little while?
Yeah.
So, okay, I think that's absolutely the best thing that you could do. I would, to try to guess the way the market is going to deal with a particular commentary or a statistic that comes out, I always find that unless I'm looking at this and I have a comfort zone, which you have, you see, if you have a comfort zone, I would stay in that position, because what's the best thing that it could do? It goes from 498, great news, it pops up 15 points, and it goes to 512. Well, that's just a tad above probably what you shorted it at, and even at 512, it gives you room, because it should come back and do a little testing, and you can always get out of it. But if it, in the small position that you got, if there's a report that says, uh-oh, hospitals are not paying, blah, 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 whatever it is, because, folks, Intuitive Surgical does the Da Vinci surgery. It's really a phenomenon that they were able to get these $1 million machines into so many hospitals around the country, actually around the world, because I know of people trying to do almost the same thing with handheld instruments that can do almost the same thing. And it's almost impossible to even get into the hospitals. So they have a lock, and how that works is going to be very interesting. Here's what I'm going to recommend. Stay in that position. If this is negative and it slides underneath 4, it's 497 right now. If I'm not interested in overnight, if tomorrow morning at 9:45, Intuitive Surgical is trading underneath 490, somewhere around the 488 area, it tells you that any bounce after that would be worth shorting. So give the market time to digest it overnight. Give the market time to digest it. You can wait maybe 15 minutes, maybe even a half an hour. There's no rush. But it's telling you that if it drops, this is a stock that's the wick of last month says it should test the 450s sometime in the next, I would say in the next 2 months. Something fabulous has to happen for it to make another U-shaped pattern going back to the 515, 525 area. So that's my thinking.
Is that a leg A failure on the monthly, or what?
No. Oh, did it make a new high?
No, I mean the A there. That's.
Oh no, that's just
the monthly
a great
start when you start the count.
No, that's a gray A. That's just that's a retracement failure mode. I keep it in gray until it makes a new high. So watch it closely. Thanks for being here. I'll be back in the next hour. We'll talk a little bit more about ISRG. Hold tight, folks. I'll be back for Larry's show.